like to welcome to the stage our four who are going to be up here telling us all about what's happening in blockchain and crypto and digital currencies. Adam Walsh from Distributed Alpha Capital, and here you go. And then Khemani.
Thank you, sir.
Hello. From Spectra, and Oliver Mehr from SVK Crypto, and Alex Batlin here from Trustology. So Alex, you're going to be moderating this, right? Yes. So thank you for stepping in and moderating this panel. Really appreciate it. And so without further ado, let's launch it. Thank you.
Thanks so much. Thank you, everyone, for coming along. Previously, you would have seen Manu. My name is not Manu, Alex, but that's okay. Je parle français très petit, so that's okay. Yeah, let me introduce. So we got Karen, we got Alex and Oliver. Karen's a fintech entrepreneur with a former background in Goldman Sachs and CEO of Spectra, a first brokerless trading platform on Ethereum. That's pretty cool. We have Alex Walsh, co-founder of Distributed Alpha Capital, which is a fund management company. And they're looking at investment strategies in cryptocurrency space. And then we have Oliver, who is from SVK Crypto, a fund focused solely on cryptocurrencies and blockchain technologies. So thank you very much for joining. Myself, my name is Alex Batlin. I don't need to read that off a PowerPoint. Just about. So I head up and founded something called Trustology. It's a smart crypto custody platform, and we'll talk a little bit more about those in a second. But thank you very much for joining the panel. What we'll probably dive into is the very first question that we were thinking about asking ourselves and informing this audience here about is, what are the real use cases that we're seeing blockchain achieving? What are the benefits of those? So this isn't about hand waving and all that kind of stuff. Real world change as we're now witnessing, and what do we think 10 years forward those changes would look like? So pretty open-ended question. I want you guys to be real at first and visionary second. So please start along, please.
Okay, sure. So, okay. I think what I would say at this moment is that wherever you have a middleman problem, right, whether it's in finance or in any other industry, that's where you get the best use case of smart contracts on the blockchain. Right? So wherever you have sort of insurance-related moral hazard, retail trading-related moral hazard anywhere, you can use smart contracts to disintermediate the middleman. And if you're doing that as a blockchain business, then I think there's a lot of viability in your business model, right? That's what, is that a fair?
Yeah, that's 100% fair. I think, as you said, any middleman proposition, blockchain technology is a great disintermediary. One area that we see already taking place in blockchain is supply chain management. There's a lot of companies, IBM and Maersk just announced a partnership. They're going to be working on a supply chain management blockchain. I think that's going to be one of the first real-world use cases. And we're seeing blockchain technology already being developed in this sector. But I think that currently, if you look at sort of ocean freight, they're working on a paper model at the moment. Everyone's operating from, passing one piece of paper to the next. No one really knows exactly what's going on with their freight. Blockchain can actually change that entirely, and that every party involved in the transaction can know exactly where their supply is along the chain, and they can even go as far as, what temperature is it being stored at, and everybody can see that on the blockchain. So I think, like you said, any middleman proposition, international payments, that's one where you have a bank which is not really adding any value. I think it's middlemen that aren't adding any value will really be taken out through blockchain technology. I think international payments at the moment, not only do they take a long time, but they're super expensive, and that's something that blockchain technology can change almost instantly.
So can I press on not use could and would, but what has happened? how have we seen change already? Because it's easy to imagine the future, and that's great. But apart from rich ICO dudes spending loads of money down salubrious places, what has changed? Or is this just all a figment of people's imagination?
I can probably take that one. So if I think about the question is either blockchain or it's tokenization. And I think they're kind of two separate, related concepts. And it's more or less like a Venn diagram, where you can obviously blend blockchain without tokenization, and you can have tokenization without blockchain. There are plenty of tokens that, they talk a lot about decentralization, but in reality, they're just, a centralized kind of created security for a particular company to, where they're giving you XYZ utility in exchange for something else. There's nothing really new or special about that, other than, it's kind of a centralized, kind of agreed upon protocol for that. But I think when you ask what has happened, there's really only been, at least as I think about it, two primary use cases. And that's one with, let's say, Bitcoin, which is a seizure-resistant asset that is, cross borders. So if the government comes for you, or let's say you're going through a divorce or something, you can move, Bitcoin basically offshore, and nobody can take that from you. That's one thing that Bitcoin does that no existing bank account does. And then I think the second primary use case, which I don't think was necessarily envisioned when Ethereum was initially created, has really been the process of capital formation through the ICO process. Never before were you able to just cobble together, almost like a Kickstarter on steroids sort of thing of massive amounts of investors in kind of a standardized protocol that, you can go out and then market the security. There's obviously plenty of regulatory issues with that. There's obviously, it's why this market is kind of like at the whim of the regulators at the moment. There's lots of guys, like very, very smart people in the industry playing with lots of different ideas, whether they be supply chain management to, real estate to, it just goes on, blockchain, everything pretty much nowadays. But none of those applications have yet to be anywhere close to widespread or even properly fully developed, I would say. If I think to the future, I think, again, if we separate it with tokenization and blockchain, I think primarily tokenization, I think what's most interesting is kind of fractionalization and adding liquidity to markets where they don't exist. So, there's plenty of good examples of there's a company that's issued tokens for LP interests into a VC, so then you can have a secondary market for your, kind of your VC investors. There's a dozen different companies that are doing real estate projects where they're tokenizing the real estate entity. And so, maybe you can invest $100 or £1,000 into, all the houses in your community or something like that, rather than, having to kind of put down a big liquid chunk for a particular asset. And then if you think about the use cases for blockchain, whether that's tokenized or not, they're immense. It's settlement of financial instruments. You've already seen that with the Australian Stock Exchange. Some of the examples you gave. Yeah. I'm not necessarily convinced you need a token to do that. I think a lot of those could be done, in replacement of some sort of existing kind of centralized system.
It's an interesting viewpoint. I worked at both UBS running the Innovation Lab and BNY, so did a lot of custody work. One thing that I noticed and got me really excited about this is if you kind of abstract, we've now got a global securities depository in the form of either Ethereum or a global cash depository in case of Bitcoin. And if you think about it, no single country is ever going to trust another country to host its securities depository or land registry or any other key registry of assets. So each country has its own database because you wouldn't trust a potentially in the future hostile nation not to cut you off that key critical infrastructure, which means you now have to have a load of reconciliation between those systems. So that introduces friction, cost. Whilst with Ethereum, the amazing thing is, Ether, for instance, acts as a settlement currency. It could be Bitcoin or equally, but it's a bit easier if you use Ether for ECR20 tokens. So now we've seen frictionless cross-border investing and frictionless cross-border settlement all in near real time on a single platform. We've simply never had that before. So whilst we can talk about the lack of maturity and so on, you now have a market that peaked at about 0.8 trillion built up in less than a few years that has achieved something that existing financial markets have not achieved in the last 50 years. That's quite amazing if you think about it. So we can criticize or hand wave, but the future's already here. We just need to see it. It's a really interesting thing. So talking about the future, though, let's zoom in, and we'll zoom out in a second. Financial fraud. It's actually kind of one of those big problems. It exists today in the current systems. I'm sure it will exist in the future. Let's talk about how blockchain and fraud go hand in hand and can be solved potentially.
Yeah, absolutely. So whenever you get some time, after this conference, or if you're bored on a Sunday, just Google the name Fred Turbide. Okay, Fred Turbide. Just look it up. This is the dark, perverse sort of epitome of how bad the things can get in reality, and with regards to how moral hazard can affect industries. Fred Turbide basically was a trader. He was a Canadian trader, an entrepreneur, maybe 55 years old, had 2 kids, normal sort of suburban life. And he wanted to take $50,000 and make a side income and grow that and, send his kids to private college, all that stuff. He deposited money at a broker based offshore, and he's one of millions of traders. And in order to trade these sort of high-end, high-return retail instruments, you have to deposit money at the broker. So he did that. Now, here's the thing, that one thing led to another, and the broker started trading on his account and all that. And fast forward 6 months, not only had he wiped out his entire life savings, $250,000, but the broker had also swiped his credit cards and all that, so he was in debt of $500K. He ended up actually shooting himself in the head, leaving a suicide note and everything. It became an international incident in Canada. Now, I know this is going to sound really cheesy, but the Ethereum blockchain is purpose-built, specifically smart contracts are purpose-built to disintermediate brokers out of the equation and allow traders to trade directly against smart contracts, which hold money, right? So I think it's a fantastic point my colleague made over there, that at this moment you have Bitcoin. It's a fantastic use case, transactions, also Ethereum being a good funding mechanism. But there is a third use case, and that's disintermediation. And I can't highlight that enough. So, for example, we have built one of the world's first brokerless trading platforms. Of course, there's going to be many. We're not a cryptocurrency exchange. We allow you to trade assets like digital options, smart CFDs. The only difference is that we're just Uber, right? We're just a software company. The traders are actually trading directly against this pool. We can't stop them from trading. And after KYC, everything is autonomous, right? So, and that wouldn't be possible without Ethereum. And that's a really, really important thing to note. So if you go to your traditional centralized brokerages that today have maybe 15 million traders plus around the world, they're doing billions in volumes per day. You go to the traders there and you tell them, listen, right now you're depositing at brokers that could empty you. If they went under, you lose all your money. There's no real depositor insurance. You can actually just convert your money to Ethereum and trade decentralized against a robotic pool of money. It's a much better spiel. So I think Ethereum is really, really good at that.
It's interesting, a lot of people talk about disintermediation. Actually, it's not quite true. What we're doing is replacing human beings with smart contracts. So
right.
It's because kind of talking to folks from conventional background, they're like, okay, so you stop doing what a broker does? And actually the truth isn't. You kind of still do what the broker does. It's just you turn the broker into a smart contract. Think of it as the Neo, virtualize that person and you perform that function. And because it's performed in consensus, that broker cannot unilaterally cheat. You'd have to convince a very large number of people to cheat in exactly the same way. So I kind of take offense is too harsh a word, but brokers do perform a useful function. It's just we're now middlemen.
Yeah.
We just can replace them with a much cheaper, more honest version called a smart contract.
Which everyone can check on the blockchain.
Exactly.
So if it wasn't honest, everyone would be like, okay, that's not
Yeah.
honest. I'm not going to use that product or service,
Because a lot of people say we remove the intermediaries, and therefore there's assumption you just stop performing those checks. You don't. Those checks are performed. They're just performed in a different way. And that's a really important one because I think a lot of people then misunderstand. If you understand blockchain, you get it. Otherwise, you don't. Good. So, investment-wise, what should be people looking into? What are the really interesting opportunities for people to get into right now?
I think that's a really interesting question. So if we look at the ICO market of last 3 months, you've seen a tremendous number of ICOs. Probably I've seen anywhere between 7 and 10 ICOs every single day. I think we're in a state now where we just have far too much deal flow. The market's really overheated. Some really good projects have come out, such as Ink Protocol and some other really good projects that have traded below offer. You've seen last year pretty much every ICO did well, 1, 2, 3x. Now you're seeing ICOs trade below offer. What I look for is really not only ICOs coming out on Ethereum, but actually is the blockchain that's underlying the ICO growing. So Q3, Q4 of last year, we started investing into Neo ICOs because Neo is a really interesting blockchain. It's growing. You know, it's the Chinese Ethereum. It already does 100 times more transactions a second than Ethereum, right? So we started investing into Neo ICOs because there was built-in edge there. Now I think whilst Neo ICOs do well, that trend is kind of, you know, it's petering out now. And actually we're looking even further ahead. June, you've got the release of EOS, which is Ethereum, but they've solved the whole scalability issue whereby one application can't just shut down the whole network if it's super popular. So they've essentially siloed each application. And EOS, already we're seeing some really interesting projects and products. Bitfinex, if you guys have heard of Bitfinex, they're doing EOS Finex. So, I mean, that will be a really interesting project that we're looking at. But actually, we've come away from ICOs of late. The altcoin market is really, really interesting. You've obviously seen the amount of coins halve, even, you know, maybe 15% every day they've been down for the last sort of like month. And now we're at a point now where there's some absolute steals. There's some real discounts out there. One of which we're looking at SVK Crypto is TNC, Trinity Network Credits. They are an off-chain scaling solution for Neo, and I think they offered around 6 cents. They traded as high as 40. Now they're back down to 6 cents. I think that's a really interesting investment case there. I mean, we really look to infrastructure projects. So we look at, and probably our key themes for 2018 are decentralized exchanges, scalability. Those two come hand in hand, by the way. Like, you can't have a decentralized exchange without being able to scale, because like, you need to be able to process enough on-chain transactions or have it go off-chain and then update to the on-chain, you know, at a later date. So those two go hand in hand. Now we're seeing stable coins as another really interesting use case. I think that with Tether, that was a really good idea, but the auditing behind Tether was a problem. We've actually just invested in a project called Haven, which has a 2-token system, and it's self-collateralizing. I think that stable coins is an on-ramp for institutional investment, and it's something that we really need in the space. And lastly, we are looking at privacy as well. One project that's coming out on Ethereum called Keep.network, really interesting project, and it allows smart contracts to access data in off-chain containers, because ultimately medical records and things like that, not everything you want on the blockchain. You want some things to actually be private, and so this is going to be a really interesting solution for that. So those are our 4 key themes. We kind of stick to those areas. It allows us to not invest in, I mean, there's loads of projects, loads of dApps out there, and I actually think some of them are really, really good projects. One project that we really liked was B-Token, right? It was essentially decentralized Airbnb, but do I think that people are ready for a decentralized Airbnb yet? Probably not. So adoption and what a good project is one thing, but is it going to be used by users is another thing that we look at. And so we kind of stick to those infrastructure plays because I think we're still building that infrastructure layer of the blockchain.
So you didn't invest in CryptoKitties then?
Well, we had them on our podcast. We didn't invest in them, though.
Okay, awesome. Moving on from CryptoKitties, I guess we're seeing a lot of regulators waking up, be that China, South Korea, US, so on, bringing regulation forward, which typically, if done badly especially, might increase friction and remove some of the benefits of the ICOs. Does it mean the end of the ICOs? What's the future? Any thoughts?
Yeah, maybe step back a bit on the last question. It was, where do you think good investments are in this space?
Yeah.
And
actually linked to that, are they going to be ruined by the
Right.
regulation? Is probably
Right.
the best way to put it. Thank you.
And so they say good panels have like, a bit of discourse, a bit of disagreement. I would say probably don't, I'd say most of the projects are very complex. I mean, unless you're going to do this full time, you're going to do due diligence on this stuff, you're going to talk with the management teams, you're going to understand these projects properly. There's all sorts of room in this space for, people pitching you things that you just frankly don't understand, and you buy it because other people are telling you to buy it. And you see a lot of that in this space. And so I think, unless you're doing it full time like these guys, I would say owning Bitcoins, owning some Ethereum is probably a good bet, and maybe a couple of the nice projects you like, and just kind of sit on them and let them run. But there's people mention this is not a regulated space, so yeah, it's kind of the Wild West, so you can do what we like, X, Y, Z. I mean, the reason regulation exists is to protect investors. If you think about the SEC, their core mandate is promote capital formation, protect investors, and ensure efficient markets. And because the space has cropped up so quickly, it's kind of like when you're in it every day, you see all sorts of pump and dump schemes. You see tokens being issued that it's not very clear what you're getting in for that. I mean, it could say one thing on the white paper, but I've seen this with a token where it says, yeah, your utility is X. And then later on they decide, well, actually, we decided we're going to do this instead, and we're going to give you a utility of Y. And there's no legal recourse if you own a token, unlike equities where you own, let's say, 2% of a company, you clearly own that. And the issue with this is that if you look at kind of how the SEC thinks about regulation, there's a test that they apply to these sorts of things called the Howey test, which is, are you making a investment for the expectation of profit in a combined entity that I guess is dependent on the reasonable endeavors of the team? And I guess the issue with a lot of these ERC20 tokens is the more clear you make that link to what the utility is. If I say you're legally entitled to XYZ, then you begin looking a lot more like a security. And so what a lot of tokens have done to get around this is say, well, we're issuing this token, you might get something in the future, but thank you for your donation, more or less, if you read the disclaimers. And I don't expect they're going to turn around and screw everybody, but they literally cannot promise you something in the future because then they're at risk of being a security. And so if you talk about the regulatory outlook, I think China has gone one way, and I think this stuff doesn't work in an environment where you have currency controls. It just doesn't work. But if you look on the other end of the spectrum, I think the US has probably been the most proactive in terms of figuring out how to regulate this in a fairly intelligent way, where the chairman of the CFTC as well as the SEC has said, this is producing capital formation. That's great, but there are plenty of scams that are going out. There is plenty of fraud, and they've, one, focused on cracking down on fraud, and two, really doing a deep dive on a lot of these tokens so you can figure out, does this classify as a security, and should we be, properly taking a look at this and reclassifying? So just in the past 2 or 3 weeks, they issued subpoenas to a whole bunch of different token projects, funds, lawyers. Interestingly, there's a system called the SAFE system that if you want to issue an ICO, it gives you kind of a protocol. People thought that was safe, but even lawyers that were doing the SAFE ICOs, you're going to have come under subpoena. So I think right now the SEC is doing a lot of digging. They're figuring out, how should we apply this? I mean, they've looked at a bajillion things in the past, so you kind of have a standardized process for that. And I think, there's real risks to a lot of these securities, and I think the issue is that it's not even that the SEC has to say anything. It's just if they make a statement about a particular token, you could see exchanges go out and delist that token, and suddenly there you go. So I think you have to be very careful what you're getting into. I think clearly Ethereum doesn't meet the criteria of the Howey test. Same thing for Bitcoin. Same thing for a lot of the larger tokens, I think are pretty safe. But anything that is kind of a future delivery of a project, as in an ERC20 token, kind of like a crowdfunding thing, I think you have to be pretty careful.
So if regulation's so good for us, why is it there's so much pent-up demand for ICOs? I mean, the other theory is actually the state tells you that it's there to protect the investor, but it's actually to protect the state against the fallout of bad investments. And they really, therefore, regulation is about protecting the state, not the investors. I guess what I'm trying to ask is, why is there
Or
such
banks.
a rush? Or banks, yeah. So
I mean, sorry to interrupt, just one quick point. I mean, I'll let you continue, but I'd like to bring some discourse into this, make it a bit more exciting for all of you. I agree with 80% of everything my colleague said, but I will also say that at the risk of sounding as a conspiracy theorist, the SEC is not only protecting investors from losses, but also from profits since 1933. All right, if you read the latest statements to the SEC from the Bank of America and Goldman Sachs, where I spent a lot of time, they've openly said that there's a systemic risk to their deposit-taking capabilities, especially JP Chase and Bank of America. They're seeing competing effects from people wanting to actually store and trade and send Bitcoin abroad, et cetera. So it causes capital outflow from the US economy. So to a certain degree, remember the SEC is state-funded as well, right? They could have seen the threat that cryptocurrency, if it gets mass adoption in the US, can actually pose to your traditional listing exchanges, the NASDAQ, traditional banking institutions, et cetera as well. They can always guise it that, hey, look, if we don't protect you, BitConnect happens, right? And so each time a BitConnect happens, they have a reason to go and come down on well-meaning projects that can actually revolutionize finance. As you said, it is important to reduce cross-border transaction costs, and you can only do that using the blockchain, literally. And so I agree with everything you've said, by the way. I actually think the SEC more likely is doing that, but let's also get serious. If Goldman Sachs didn't exist and JP Morgan didn't exist, if you didn't have these big banks, the SEC would have no reason to exist as well to a certain degree, right? And they're protecting us, okay, but then why does Bernie Madoff get to run away with billions of our money, right? Let's get serious. It's not like before Bitcoin existed, you didn't have scams. You had so many scams in the US across all stratum of investing. So I would say let's cut the crap. The SEC should be more honest in their endeavors. But please, sorry, are you?
I completely agree.
you finished my sentence. Thank you.
Sorry, maybe I'm being a bit more aggressive. And I can already see the guards sort of lining up at the back, you know, willing to carry me away. But I'll say what a lot of people have been thinking. As an entrepreneur in this space, you know, I have a lot of our Spectre shareholders here today as well. We're disgusted by how regulators are behaving in this space. They're actually hindering innovation. And we're also disgusted at regimes such as you have Crypto Valley in Switzerland. What is it called? There's this canton.
Crypto Valley Association.
Zug, right?
Zug, yeah.
It's not Crypto Valley. It's a crypto prison. It's important to. It's impossible to open projects there. So, I think there's a deeper conversation to be had here. What's actually going on? I think if you look at all the bans in India, in China, and then the change in stance in South Korea, in China against ICOs, and then suddenly pro ICOs. After the prices came down, I think we need to really have a more honest conversation what's happening here. You have a lot of capital that has come in this crash, right? That stabilized Ethereum where it is, Bitcoin where it is. You have big funds in Palo Alto getting in because they missed out first, right? Because the poor man on the street started to make money. Cab drivers and everybody, nothing against cab drivers, started to make a lot of money, right? But then the big boys came in and they want to make money. The blank fines and all these guys. And I think they're actually using the SEC. They're actually using the SEC to say your American profits are at risk.
So let's talk about the funds then. So we got this beautiful thing about decentralization, no middleman taking a cut. And then we're rushing to put crypto funds in, which is a middleman taking a cut. What value do they bring? Yeah, please.
Yeah, it's a good question. So I think, let's see.
Open to all panelists. Please.
Yeah, of course, of course. So I think there are now, if you believe Eureka Hedge, 150 to 200 cryptocurrency hedge funds out there of varying levels of legitimacy. And I guess if we were sitting here, in June or July of last year, there was a really powerful penetration story where you could say, well, only 1% of people own Bitcoin and all these sorts of assets. So as more people get into this space, the whole space will go up and you'll benefit. But now, I think the majority of the individuals who would normally just get into this sort of stuff, like the forward-thinking tech people, have kind of gotten in. The FOMO's kind of passed. The market's kind of settling out. And I think for 2018, the big story is, okay, institutional capital. Is it coming? Is it not? And I think There's a whole bunch of funds out there getting set up. I mean, we're one of them, where we're looking to allocate to the space. Because one, has high return potential and low correlation to existing assets. And if you study, any kind of portfolio management theory, as you add another asset class to your portfolio that does that, you move out the efficient hypothesis or a line and you create a better portfolio. I guess, sorry, I'm kind of off tangent.
That's all right. Yeah, I was going to just say, so...
I remember what I was
You want to finish?
So yeah, let me finish. So in terms of funds, I would say the vast majority of them are essentially charging, I think, a lot of money for access, for market access. If you look at Polychain, Metastable, most of the larger crypto funds, they charge between 2 and 20 and 3 and 30 to buy a basket of tokens and sit on them and have them go, have the market beta do what it does. In the traditional hedge fund space, that'd be insane because everyone's looking for the alpha this, alpha that. It's very, if you're going to build a beta product, that's a 50 basis point product that doesn't charge a performance fee. So I think the emergence of alternative strategies, it's a $400 billion market. $5 billion of that is in any type of fund vehicle, and $4.5 billion of that is in pretty much long-only VC-type products. So that means there's only 500 million, less than 1% of the market is in actively traded, professionally managed vehicles. And I think for somebody who comes from a background of trading equities and credit and commodities, that's fascinating. So I think they add value because the market is so efficient, so you can create outsized returns if you have a differentiated strategy. But I wouldn't want to be paying 3 and 30 for someone to buy a basket of tokens and let them, go up over time.
So I feel the back of my head heating up as we're about to run out of time, but it'll be remiss not to ask a question about China, so I'm afraid I'm going to have to pause on you. I'm so sorry, but I would love to...
I was going to jump in on that one.
I'm sorry about that. I've already been told off, and I'm feeling the heat here. So I guess the last question
What
would
if we
be
finish this
is-
one and skip the China one?
Yeah, we've seen changes in the Chinese market being one of the most dominant players. With recent regulation change, it's altered the landscape. What's the future of crypto and blockchain in China? Any thoughts, guys? And please keep it brief, otherwise
I'll keep it real brief. I think that, like with a lot of other things like Facebook, China has Tencent. I think that China are gonna they're going to create their own ecosystem, and they're already doing it with Neo and on-chain. A lot of people don't know that the team that does on-chain, which does enterprise blockchain, also did Neo. I think they're going to create their own ecosystem within. Maybe it's not Neo, but I think that right now that seems to be the most obvious one that they're going to use. And there will be like Ethereum and Neo, and the Chinese investors will majority, and the projects will probably be all in that Neo ecosystem. That was my point. Well, the last question as well, I think that for funds, just real quick, just touch on it, that used to be like any man could get into the ICO.
You won't be in trouble with me, it'll be her.
This is a real good point, I promise you, right? So it used to be like anyone could get into an ICO, like, oh yeah, it's cool, like, I'm an individual, I've got some money, I want to invest. Nowadays, that's not happening. I'm seeing a lot of ICOs just straight up cancel their public sale, private deals only, and if you're not somebody who can add value to the project in some sort of media department or exposure department, then you're probably unlikely to get involved in these projects. And I think that's going to continue to, the barriers to entry will continue to get harder. So that's kind of one reason why maybe a fund has some value. You know?
That's a really good point. Like negotiating deals is, I think, probably one of the bigger benefits, unless you have a differentiated strategy.
Any other comments about the Chinese market?
Nothing at all. I've spoken enough.
I have a follow-up question. So if China creates its own ecosystem, does that mean that there is just China with China?
Sorry?
Does that mean that China is just trading with China? If it's creating its own ecosystem, how does that work? How can they be part of the international market then?
Well, it's tricky because, ultimately it's still decentralized. Anyone can get involved with Neo, whether you're in China or not. I just think that the majority of projects that are developed by the Chinese are likely to go on to their own ecosystem. That doesn't mean that outside investors can't get involved. We've invested in many Neo projects, and that might change. I'm waiting for their stance on ICOs to come out. I don't think they're going to ban ICOs forever. What I really think they're trying to do is figure out a way that they can yeah, they can figure out whether they can corner the market for, you know, for ICOs in China. They haven't figured it out yet, obviously, but I think that outside investors will still get involved, but I just think they're going to create their own ecosystem for all the Chinese projects.
So you mean this will be led by Alibaba or something?
Oh no, I mean this is led by Da Hongfei and the whole Neo team. Like this is, but they're already doing events in San Francisco, New York. They're already trying to. I actually think that Neo is trying to compete with Ethereum. They just want to be bigger. But Chinese projects will probably at the moment choose to go to Neo, and that's what I've seen so far.
So just to jump in, I was, I guess this is back in August, September, was in China. I went to some events. And I'm not sure if it's Guiyang or if it's like somewhere in the vicinity, but there is like a specific area where there's this hotbed of blockchain projects that are kind of all going on. And they're all kind of under some, you know, like, I don't know if it's an overarching regulation, but there's an area where you can get a license to do blockchain-oriented projects. They're not necessarily, as I said, you know, token-specific projects. It's not that you're trading all these different tokens, but there are huge benefits to using blockchain technology with or without tokens. So I think China's, you know, Chinese are very innovative. You know, they work incredibly hard, and I think in terms of tech development, are way ahead of the West in a lot of different areas. And I could see a scenario where something similar happens in this space, kind of under the radar.
I mean, being out in Shanghai, I saw a lot of investment in IoT, energy trading, battery trading, electrical vehicles, and blockchain. So, huge amount of opportunity, I think, in that space, and people are thinking extremely broadly. So, very impressive. And on that note, I will ask everyone so much. Thank you. A round of applause. And I hope you enjoyed it.
Excellent panel. Thank you so much. I hope everybody was taking notes because there was a lot of learning there. Thank you, guys.